Hello and welcome to all of our viewers, wherever you may be. My name is Sarah Jane Demy of Demy-Colton, and on behalf of Demy-Colton, the Demy-Colton team, and our sponsor, Hogan Lovells, it is really my pleasure to welcome you to the 29th installment of the Demy-Colton Virtual Salon Series, and our last one for 2021. The title is Beyond the Business Pitch at JP Morgan, and I put in parentheses Biotech Showcase. Key issues for emerging companies and investors in 2022. We welcome all past participants back again, and of course, we welcome all of you who are joining us for the very first time. Demy-Colton's mission is all about convening healthcare industry leaders from multiple disciplines to catalyze change. And we do this through in-person and virtual events such as Biotech Showcase, our CEO Summits, our CEO Dialogues, BioFuture, and our virtual salon series. And in the spirit of convening people, registration for our 14th annual Biotech Showcase, which will now be delivered virtually, is ongoing, and we expect 2,400 participants. You can register to attend and view our content, apply to join a class of 304 presenting companies, and participate in one-to-one meetings. Our program incorporates our digital medicine and medtech showcase, Seed Showcase, and China Showcase this year. And over the years, Biotech Showcase has become the premier conference alongside the JP Morgan Healthcare Conference, and known as a place to meet with innovative companies that are not yet on everybody's radar screen. Before we get underway with today's program, I want to thank Hogan Lovells again for sponsoring today's salon. A word about the structure. We will have a 50 to 55-minute discussion on the topic, which will be followed by a Q&A session. You can submit your questions in the Ask a Question pane below the screen, and we will address as many as possible. And of course, we ask you to make your questions as concise as possible. Also, please note that the virtual salon is being recorded and will be available for on-demand viewing shortly after the end of the program. Now to today's salon. Beyond the business pitch at JP Morgan, key issues for emerging companies and investors in 2022. When we made the decision to follow JP Morgan and go virtual with Biotech Showcase, we thought that we would do this salon at the beginning of the year during the first week of January. But the participants in this salon convinced us that many of you may still be heading to San Francisco to meet with investors on a one-on-one basis. And in that case, the advice that you will hear today will be very timely and helpful for all of you. I am pleased to introduce our co-moderators, Kristen Conarn and Andrew Strong, both partners at Hogan Lovells. And our panelists include David DeGraaf, President and CEO of Upcuro, Clifford Stocks, CEO of OncoResponse, and Kip Cyrianakis, Managing Partner of Epidaurix Capital. Without further ado, it is my pleasure to turn the virtual podium over to Kristen and Andrew, and I will return during the Q&A session. Andrew, Kristen, it's yours.
All right. Well, welcome everybody, and we're going to be very efficient with our time today. One thing's for certain is that biotech is entirely unpredictable. And as you know, we were planning this session last week prior to JP Morgan pulling out. And of course, everybody else is kind of scattered after that. But one of the things that we as a group felt is that the need to raise capital, the need to meet strategic partners, the need to form relationships is ongoing. And this is something that you're doing 24/7, 365 days a year. And so now that we have, our new reality or our new normal continues yet for another, who knows how long, this way of virtual meetings and presentations will continue. I think we were all enjoying the resumption of some semblance of the norm, which was with meetings occurring, but we have to be able to adapt. And so given this monkey wrench that's been thrown into plans, we're going to turn it over to our panelists to talk about, all right, now what? What are you going to do now that you're not attending JP Morgan, or are you? And how do you make the most of this, since many of these meetings have already been set up? Perhaps you reserved a hotel room on a 4-day non-refundable basis. What are you going to do with that? Are you going to make use of it? And I will just, we're excited about this time to spend with you, and we hope we get some really good questions, and we'll address some of these topics in the next 50 minutes. And so I'll turn it over to Cliff Stocks. And Cliff, why don't you kind of answer that question, what now? And then you can hand it off to other panelists.
Yeah, sure. Thank you, Andrew, and thank you, Demy-Colton, for putting on this virtual seminar. This is terrific. Yeah, for us, we've got a dual approach, like many, for this particular JP Morgan. We started back in early November, scheduling meetings, and already about half of the investor groups were already virtual. Many of those investor groups like doing virtual meetings for initial or follow-up meetings or presentations, but we had a very robust set with Pharma. Pharma quickly saw the opportunity, I think, to save a lot of money, and so they switched to virtual right off the bat. I saw that happening. We had made the commitment to go down for the full week as planned if we were able to keep meetings, but Pharma very quickly went virtual. So within a day, almost all of Pharma. We have one meeting live with Pharma from Europe down there. It makes sense. We're talking to them, get face to face. So we'll just go down for the day. So for us, the whole thing switched basically to virtual. All the other investors who were meeting live went virtual. We just kept them on the schedule at the same time that we would have been meeting, and that'll make for a little more relaxed. We won't have the time getting between meetings in San Francisco can be crazy sometimes, trying to catch an Uber or a taxi if you're moving from a far distance, a mile or two, or you just walk or run fast, between meetings. But so for us, it's kind of, all virtual except for one meeting. And we've got a pretty robust JP Morgan set up for both Pharma and individual investors. Kip, what are you doing?
Yeah, so we had originally planned to kind of do a hybrid ourselves. In most cases, depending on what the year looks like and what we're trying to accomplish out of JP Morgan, we'll either send the full management team or a subset. So this year, we had planned already to a couple of the team members were going to go out, and then we were going to do some virtual meetings. As it turns out, we're now all going to be virtual. And so we're continuing to set up during that week time slots, whether it's for Pharma or for our kind of business development with our Pharma partners, and then companies that we're interested in taking a look at. And the reality is for us, we're also using the whole month of January to set up meetings. One of the things that we've always found with JP Morgan, while you get to see everybody all the time, the amount of meetings that occur in that period and the mental energy, if you will, that you get from people is rather limited. And so we're using the time to actually trying to set up more robust meetings and just doing them virtually during this year. Andrew, or actually David, I guess, how are you approaching it?
Yeah, thanks, Kip. So Epcuro is clinical stage, and we actually have some data reading out during Q1. So I was planning to reach out to the investor community in more seriousness towards the end of Q1, and that was the reason to already decide not to go to JP Morgan, because I feel going there just to press the flesh is not the right thing. So you need to have a purpose to a set of meetings. What I found over the last 2 years is actually that raising money and reaching out to investors has become easier and not more difficult. And to some degree, the features of JP Morgan, the ability to see everybody very quickly, have been a little bit subsumed by other investor conferences. And now it's far more efficient to go and attend those. So I can do this in between of doing work right here in half-hour chats with investors. So my investor outreach for Epcuro over this year, even though I've not done anything active because we were well-financed and working on our clinical plans, has been actually extremely robust. So my main reason to go to something like JP Morgan is having a clear business need to be there and a need to meet people in person. And I think, going back to what Cliff said, sometimes there are meetings where you need to finalize something. You need to make sure you get to know each other personally, especially if there are big commitments involved. Completely. That's why you should be there. But right now, I think there's a little bit of an opportunity for all of us to look at fundraising a little bit more distributed over the year rather than focusing only on the month of January. We can go and grab that opportunity. That just gives a lot of richness to our lives because we don't have to always get on a plane, be in New York, be wherever the conference is in London or in California. We can do this from this office right here.
Thank you, David.
I'll also add to what both David and Kip said with respect to doing this distributedly. One thing we found was that with many of the investors, we just couldn't find the slots because we both had full schedules, could not find the slots to meet during JPM. And so I was able to do additional outreach, request meetings the following week or any time in January, and we're able to secure those meetings. So a little bit of godsend in that way to get some of the other bigger names on the schedule.
Yeah, and what I was going to discuss last week is my most successful JP Morgans were really about how to make the meeting with new investors memorable. So I talked about things like having very old-fashioned flip books with 10 slides where people can hold on to a little bit of what you've told them. This is a way for them to make notes and to keep track of things. All of those things become less important because you can actually take a little bit more time over a larger time span to be able to reach out to people. So there's a little bit of a blessing in that as well.
David, just to follow, Kristen, I'm going to keep the conversation going.
Keep going.
David, just to follow up.
You guys don't need us.
I think a really good idea from the investor standpoint on those kinds of things would be, instead of the flip books, which, yes, were always great, you could write on, although I always hated carrying them, but nevertheless, is to make sure that, as soon as you finish your pitch or as soon as you finish your virtual meeting with the investor, send the follow-up, send the deck. Yeah. Make sure that, the very little time goes between when you've had the meeting, because we move on to the next one and kind of have to try to kind of think about how do we process what we've just heard. And so I would just give everybody the recommendation to do your follow-up quickly and make sure that you stay in front of the investors.
So Kip, to your point, I like to send a PDF with my slides the night before, even if there's still some changes, so that people can go look through those. And we also now live in a connected world in different ways. Use LinkedIn, make sure that you've got people's email addresses. Phone numbers are becoming less important, although texting still is a preferred method of communication. Just make sure that people have a very easy way of reaching you. I always think of this business as, we have got something to sell. You are buying as an investor. We need to make it easy for you to buy, as easy as possible.
Indeed.
Okay, I'm going to try again to go to the next question.
No, I'm just kidding.
So it sounds like this is definitely the year that you just have to, learn to pivot, make decisions at the last minute. But you all have a history of going to JP Morgan in normal times. Now, with the current situation, what would you give for advice to our people watching on how to set up these meetings? Because you're all talking about how you have meetings. What about the emerging companies that are going out there and looking to have meetings? When do you start that process of trying to set up meetings? And how do you go about finding people to meet with? Cliff, do you want to start?
Sure, I can start us off. Yeah, I mean, I've done it all different ways. Started too early, started too late in those things. So what I've settled on is I like to go in waves. So I like to get a deck out to potential, to those folks would like to meet with. We do some targeting exercises around mid-year. We try to decide, hey, is this a Is this a partnering year? Is this an investor year? What are we up to? So we try to set together our targets of who we'd like to have in the syndicate if it's investors, who we'd like to partner with if it's pharma. And then around the beginning of November, I like to get a deck out and just say, hey, we're going to be at JP Morgan. Here's the update. Happy to jump on the phone if you'd like to get on your schedule for JP Morgan for a meeting so you can meet the entire team. And generally, I get back, hey, too early, we haven't set our schedule yet, but we've got you on the list. And that's exactly what I want to have is, people thinking about us and getting on their calendar. And then right after Thanksgiving, I start banging it again, early December. Okay, let's get our schedules going now. Let's start meeting and matching, because there's a lot of juggling and dancing to make sure you get the schedules just right. As you start to set down those meetings. And then, and then it really is just a continual reminder of people that you're going to be at JP Morgan, trying to get a request in for a meeting. Happens right up to the meeting. Typically for me, there'll be meetings that come together when people see they've got some slots, or you'll schedule a coffee meeting, or something toward the end of the day, just a brief handshake and get together. This year, it will be less of that. It'll be more formal for virtual. But that's how we go about it. Is just think about it early in the year and then start working toward it. It's a super important conference, like many. I think the Demy-Colton conference would be a terrific thing to hit this year. In addition to JP Morgan, it gives you an opportunity to get in front of a lot of folks.
Yeah, and so just to add to what Cliff says, if you're completely new, right, you have a new management team, a new idea, and you need to get in front of people, I think the Biotech Showcase, for example, is a fantastic place to get started to, if you can get in to talk about yourself and just give a little bit of a preview of who you are. The other thing I'd say is that this is why it's really important to work with your board and make your board members do some work. Generally, your board has more exposure to the investment community, knows people there, and if they don't, you don't have the right investors, and you should get them. You should get independents who have that experience. So build a team around you to support you in your outreach, and have them build strong relationships with you and for you, and lean on that a little bit. CEO positions, senior management positions can feel very lonely. If you build the right relationships with your board, they don't have to be lonely. You can really do this together.
And I'll just follow up with that from the investor's perspective. We often meet with companies, and I would encourage people to meet with investors when you're not trying to raise money, just like when you're with pharma is the same way. The earliest way to start is doing it when you don't have an ask. You're really just getting to know people. A lot of times, the investors, we're investing in people primarily. I mean, obviously the technology is important, the science is important, but we have kind of we'd rather invest with people that we like and we know we can do business with. And so taking the time early on to make sure that what you're doing aligns with what the particular investor's investment thesis is very important. And sometimes that's as easy as reaching out to somebody in an email or even through LinkedIn to see if it's a fit. Using your advisors, whether it's your board, whether it's your legal advisors like Hogan and others and your network to really reach out and understand who's the right fit for the company and the technology and the stage that you're investing in. We're a seed and Series A investor. So we get a lot of companies, later stage, clinical stage companies, and it's just not a fit. And so take the time to really understand who the right match is for you and try to meet them, frankly, when you're not raising money first. Yeah. If you haven't been able to do that, then, really reaching out and trying to send over a decks early, as Cliff mentioned, finding ways to get in front of them, because we will triage something very quickly in order to then set up a call or a meeting. So you may not get that meeting first if you haven't already gotten something in front of an investor to just see if there's of interest.
And just to add to that, Kip, I completely agreed with you. We also live in a world where we can find out a little bit about the person we're presenting to the next day. So it's worthwhile to find out where somebody went to school, whether they have a PhD or not. And you see on the invite who's going to be there. There shouldn't be lengthy intros. You should already know just enough about them that's the short portion. And that's another thing that I often see young teams do badly is personal intros take up 15 minutes of a 30-minute meeting. You're lost. Now learn to talk about yourself in a 20-second soundbite, and then move to what we're all here for, which is building business.
Great advice. I agree completely.
All right, I'm going to go next. So everybody knows that the first week in January is what I refer to as a springboard week. And everybody, seems to, when they're arriving, there's a general theme that's going around, in terms of what's hot and what's not. And Kip, I think your comments about, better, more, thoughtful presentations over a longer period of time absolutely makes sense. But as you know, people wanted that very tight window to really kind of see if their technology hits a receptive audience, or if there's some type of deals that could be happening, because a lot of decisions get made in the weeks after JP Morgan. Do we got IPO? Do we do another deal? How do we kind of get the best of both worlds, where we get that springboard coming out of JP Morgan, but also have real context? Because that the deadlines of getting to JP Morgan makes people commit to that time period. It seems like now it could be dragged out, but, Kip, I'll come back to you with that, and then we can pass it on.
Yeah, sure. So for us, we use JP Morgan almost as the kind of kickoff as of the year, and thinking about, how many companies we're going to invest in and what we're going to do. And from us investing in companies, but also, again, as I mentioned earlier, we do a lot of, if you will, business development with our companies, with the pharma companies. So I think it's still important to use, whether it's JP Morgan week or, a few weeks within January, to really hit the ground and kind of kick off the year, as you mentioned. I think we're very far from the IPO front, so I can't actually comment on that. But for us, many of the JP Morgans that we've attended has, with people setting things up earlier, or us meeting senior leadership because we've had discussions along the way. It's a great way to actually almost get to the yes or the no. Ideally, it's the yes, because you're finally getting to the final decision makers in a very crunched period of time. And so I think just continuing to use that as a springboard, as you say, really makes sense, and help you plan for the rest of for the year and the timeframes for things. Cliff, do you have anything to add?
No, let's move on. From that question.
So I think one of the things that's evident from speaking with our panelists here is that you all have different roles. Your companies are at different stages. And so could you just speak a bit about who companies or companies should be targeting when they're going to meetings at JPM Week, depending on where in the fundraising stage their companies are, if they're an emerging company, if they're going towards a crossover. It seems as though setting up the right types of meetings might be more important than just the sheer volume of meetings.
Yeah. Yeah. So, and actually, I think Cliff explained it well. You need to, so you can go scattershot. You can say, look, I'm going to pitch to 50 or 60 venture firms, and we'll see where the spaghetti sticks. I've done that, and that can be successful, and you can get there. It's a lot of work, and I always feel that you're wasting people's time sometimes a little bit, because there are people who are interested in the story but don't get to fit all that well, and then it actually doesn't build long-term relationships. So I think what Cliff said is right, which is You need to have your list of investors. You need to understand the reason for them to want to invest in a company like yours. Then you need to make sure that you have a personal relationship there, either through your board or because you happen to have it, and target them that way. So I'd rather, to your point, Kristen, have 10 or 11 meetings with crossover capable funds. And that's the other thing. Put in your first line in your email clearly what you expect from people. If you're saying, you don't say, hey, we're raising a round. Say, you know, we are interested in a crossover lead. And if somebody says, well, we can follow, but we can't do leading and crossovers, great. Then you don't need to waste their time or your time. You can help focus. So just be very clear about what you need and why you're reaching out to people.
Yeah, I'd agree with that. In your email, it's great to get your ask up front, what you're thinking about, why you want the meeting, what's the objective of the meeting, and then something very quickly, briefly, the hook that the other side reading that email can know whether or not this is in the category or of interest to them. If you give them an idea of your stage, because many investors have specific investment theses around stage, where they'll develop at what stage you are, and what stage of investment as well, both your stage of preclinical, clinical, where you are, how far you are from IND. Those things will help someone decide if it fits their investment thesis and if a meeting is warranted.
So we were just asked what a crossover lead is. So let me just brief. So when you have a round, someone needs to price the company, and that involves more work than what the other investors do. And often the other investors lead on an investor that's really done the work to understand the fundamentals of the company and wants to price the next round. That's generally the lead. The crossover part is a crossover between being private and a public company. That's the crossing over. So you want people who have the ability to invest both in private and in public companies. So that's what a crossover lead means.
Thank you for explaining that. Kip, do you have anything to add? Do most people who come to you know that you're at the very early stages of investing? Or do you find that you get people who haven't done their homework?
Yeah, the vast majority of people do know, especially if it's people that have been referred to us by either other investors or other advisors or board members. But it is still interesting to me. I mean, it's very clear on our website what we do. Most investors, it's very clear. But so we still do get people that kind of just blanketly send emails out. But the other piece of advice I think I would add is also to be realistic about your time frame for fundraising. So if you're just kicking off your round and looking for that lead, whether it's a crossover lead, as David said, or just a lead for your Series A or B, recognize that the fundraising process is going to take 6-9 months on average, and letting somebody in that intro email know, hey, we've got a lead, or we're looking for a lead, or we're raising, we plan to close in this, in the summer or whatever it is, just so that we have a clear perspective of the timing of your cadence of when you need to raise the money by. One of the things that is challenging for us is when somebody sends us an email that says, hey, we're closing in a month. Do you want in? And it's, we don't do diligence that fast.
Neither do we.
I was gonna say, I don't know too many people do from start to finish. But, just little bits of information along the way to just help us kind of triage through and not waste your time and ours if it's not really a fit from the beginning.
Great. Well, we'll turn to the next question, and this will be a little bit broader of a question, considering that, this is now, we're in the full year fundraising mode, strategic mode. Each year seems like at the beginning of the year, there's a theme in terms of what's going on. We've had the SPAC theme, we've had cell therapy, we've had immuno-oncology. With the kind of last 6 months in the financial markets not being kind to biotechs, at least on the public side, what do you guys think the theme is going to be for this year? And particularly for those that are on the private side raising capital, maybe with an eye to go public at some point in time in the next 24 months.
I always think strong data speak for themselves and strong clinical data speak for themselves. So I think that's really important. There's quite a bit, we have a hangover of investing in great new ideas that still had major challenges around gene therapy and cell therapy. So I think for this coming year, we'll see a pivot back to, older, well-known modalities where that modality risk is severely decreased, and straightforward clinical stories will still do quite well. But we're seeing that ourselves. We have a lot of inbound interest without really doing outreach. So I haven't felt the difference. So will the IPO field change? Maybe. I think if you've got a strong syndicate around you, you'll be able to work through that. And we definitely have seen an uptick in interest from pharma. Pharma is ready for M&A, and they're looking at companies at the right stage to go and bring them in. So for me, it's back to fundamentals more than anything else.
Yeah, I would agree with you, David. I mean, for us, we think of an IPO actually as a financing strategy, not as an exit strategy. And so while I think that the IPO market will still be there, I think that the days of very, very, very early preclinical companies that go out. You might still get a platform company here and there that goes out, but I think the clinical data, I think the IPO markets are starting to settle down a little bit, but the M&A markets are still there. Pharma still has cash. They still need pipeline. And so making sure that you create those pharma relationships early on, letting them know what you're doing and where you are, and then continuing to update them along the way so that when you are ready to transact back to you have a relationship, you know the people. So I think sticking to creating good businesses and having good science with good teams, with good strategies, and you can never lose in that vein.
Right.
Yeah, I would agree there. It's important to establish those relationships with pharma. It's generally a several-year process until you get to a deal. A lot of times, I mean, if you have a hot prospect and a good clinical data, yes, you can open that up and get pharma to jump in and talk to you. But when I'd encourage younger companies, that are emerging companies that have technologies that are going to lead to something that pharma might be interested in starting those relationships early on, getting those meetings. They don't have to be at JPM, but getting those meetings, trying to get face-to-face or virtual, have the conversations with pharma, and then make sure you track that, every half year, you're touching bases, giving an update. It really does take 3 or 4 years sometimes to be able to get a deal in place in that regard. So that's one important point. And then with respect to investors, I think come back to targeting again. Think about who's going to, who are the investors you'd like to have in the company? Who are the investors that you think would be helpful? Who might have invested in other technologies similar to yours? Who may have an interest? And, sometimes if you get a no from those investors, you can certainly ask them, hey, who do you think might have an interest in this technology or in this asset?
Yeah, Cliff agreed. We're all here about creating unfair advantages for ourselves. And part of that is bring the people in who are going to help you create that unfair advantage. Just be smart, look around, align, and people like to double down on things that worked for them and that they understand well, and that really helps the company as well.
Yeah.
So pivoting just a bit. I'm sorry.
Things to think about with respect to these virtual meetings. So the investment community, and I think pharma, has come along now to being very comfortable with virtual meetings. I see a question here about our emerging companies who can't get face-to-face at a disadvantage. I can tell you that we raised 45 million Series B during 2021, started that process in late 20, and I still haven't met those investors. So it was all virtual. So you can close deals virtually. You can raise money virtually. It does take a lot more work. You need to do a lot more follow-up. You need one of the tactical things I'd advise is just making sure that the virtual experience that you can provide is good for the investors, that you've got, good camera and good mic setup, and that there's not a whole lot of distractions to the meeting.
And just to add to that, we will absolutely, we've done, I think so far, one deal that we haven't had the opportunity to meet the management team in person yet. But we did a lot more due diligence on the team. And so, there are ways around that. We have also figured out who actually does know. We've used our advisors, we've used board members, we've used different people to kind of get a sanity check on whether the people check out if you can't meet them in person. So it's a little harder maybe when you don't get the opportunity to meet somebody in person and, often break bread or do whatever, but it's not impossible. And so I would continue to go down that path and be smart and safe in the way you're approaching your fundraising.
And it also helps for building teams because the world has opened up to us in terms of building teams. We're no longer looking for people who live in the Boston suburbs, which is great. So one of the questions there is around the Biotech Showcase. I'll tell you, the first time I ever pitched a company where I was CEO was at the Biotech Showcase. And I was trying to remember when it was. I think it was 2011 or 2012. That pitch was wholly unsuccessful in terms of bringing investors in, but the set of relationships that I built there, I'm still carrying with me. So the other thing that I'd say for teams is it always feels like this one is the one. It's going to be the biggest one you'll ever have. Think about building long-term relationships. This is not a 1 or 2 year game. You're going to build a career around companies and around ideas. Just see this as a chance, even if somebody says no, to understand why they say no. Respect that, and then keep building the relationship. And sometimes a no does turn into a yes later on.
Absolutely. It's Biotech Showcase has been great for us. We make sure somebody covers it and we look at the companies that are in presenting. Sometimes they don't fit what we're looking for, but many times we spend the time and go through and meet with them. But we have, we invested in a company earlier this year that we started looking at and talking to a couple of years ago, and we knew the CEO from another adventure that he had done before that didn't fit our investment strategy, but this one did. And so it is, I can't reiterate enough how it really is about, creating relationships.
So I think, David, you bringing up a past failure or a learning moment from a previous JPM, if you had to think back, panelists, to the first or second time that you actually went to JPM week or attended some of these meetings, what advice would you give to that person who's doing it for the first or second time, taking what you learned? How would you do things differently if you were approaching it now after all this experience you've gained?
I understand motivation better. Sorry, Kip. Sorry, Cliff. You go ahead.
No, David, go ahead. I didn't know who the question was for.
Okay.
It wasn't actually directed to any one person. It was really just all of you thinking back to when you first attended JPM week. If there's something that you could think of that you would have done differently, approached it differently based on what you know now, do you have any nuggets of advice for people who are just heading out and trying to do this right from the beginning?
So I think I made a mistake. I was naive the first time because I thought it was about the holy gospel I needed to preach about how fantastic my company was. And it was really about understanding motivation for people on the other side and seeing this as long-term relationship building. And you very quickly learn that that's not what it is about. And so there's a lot of listening that needs to happen at JPM. So that's one. And I think the second one is that I took meetings with people because I could. And I shouldn't have. I should have been really, really selective to make sure that those meetings, again, had a purpose, that there was intent it for both sides, because otherwise you can get very busy. So that's it for me.
Yeah. Hey, when you're younger, you have a lot of energy. You can just, make the rounds, drink all night, get up, do it again, and keep going like that. Those were the early JPMs. But as you mature and age a little bit, you say, hey, I don't want to get myself so exhausted. I want to be very targeted, be very intentional about what I'm trying to accomplish, and also in building these long-term relationships. One of the things that I do think is a disadvantage for some of the emerging companies or those youngsters who are starting out in trying to promote their companies is the fact that you don't get the chance for the parties at JP Morgan. They're epic, they're fun, and they are a great place to do that networking, to trade cards, or nowadays trade with electronically on your phones. And just make that face-to-face connection with someone. That typically has gone a long way. Hopefully we get back to that, and we'll be able to do that. One of the things that I do hold for myself during JP Morgan week, which I think benefits, is no alcohol for me during the whole week, not even wine, because I just don't. You just need to keep all your energy, keep all your focus, keep your intention high, and it's going to be a grind. You get sometimes 40 meetings in 4 days, and it's something.
Yeah.
And just to add, I think having a little bit of time that you leave in each day open to be able to, when you see somebody on the street that you haven't seen in a while or whatever it is, that you have a period of time where you can connect, so you're not frantically going from one to the next. And so leave buffer between your meetings, and leave some open time to be opportunistic about whether it's meeting somebody the night before at a networking event and having the ability to go have a coffee with them the next day or whatever it is. It's an intense week. I would say also make sure you get there early, get some rest, and get some, and stay hydrated, frankly, and really, pace yourself, because it is a marathon.
Yeah. So there's one other community that we haven't really talked about, and I'm looking at some of the questions, and I think they're important people to talk to, and those are the bankers. That's another group that's there at JP Morgan. That's why it's called JP Morgan. Those guys are there for sure, but other banks are there as well. And they know a lot about pharma. They know a lot about deal structure. They talk to everybody in the ecosystem. And those relationships become really, really important to build as well, both with the bankers themselves, and then if you are at a point where you could be transactional, with the analysts. So those are a set of meetings that I would take as well. And again, get some good advice on who to talk to and how to talk to bankers, but because they talk to all of us, they talk to investors, they talk to pharma, they talk to biotech, they're fantastic connectors. And they may even help you find a board member because they know somebody else somewhere else who's interested in a board position. So just use those connections, especially early on. They often want to build those relationships because for them it's a long-term game, and you can get something out of that.
Definitely, it's great advice, David.
Okay, so we're going to pivot to some of these questions, which we've already started to look at, some really good ones that are coming in. One of the questioners asked, now that we're kind of past the innovation associated with some of the COVID vaccines and the coming therapeutics, has the gloss lifted from pursuing anything that's related to COVID, whether it's diagnostics or therapeutics or vaccines? And what's the general sense of the panelists in terms of this continued COVID investment?
Andrew, I would say that if someone has a better mousetrap to bring it forward, to show people who are working in the COVID space, COVID's with us for a while now. We're going to see other variants. We're seeing Omicron now. It just, it's why we don't have a JPM. We're going to see other variants in the future. It's going to, turn from pandemic to epidemic, and it'll be with us a while. So I think that folks who have good technologies for detecting and treating, or even vaccinations, are still in the game.
Yeah, I just even broadened that to say what we've learned is that we need to be prepared for pandemics, and there are going to be other ones that may not have been a great investment thesis even 4 or 5 years ago, but I think it will be going forward. There are however many billion people, 8 billion people on this planet. We are one big cauldron of potential viruses and viral outbreaks. Go and develop your technology. Think broadly. Even if you look at the technologies that have really made a huge difference for the health of this planet, and I'm very proud to be part of that industry, mRNA, as well as some of the detection reagents, as well as some of the molecules that are now active. Those were all based on prior viruses, prior infections, and then repurposing. So just be ready. Go pitch that. I think it's a great thing to do right now.
And I think that's the important point is if you're talking about this current COVID, kind of what it looks like today, you may have the challenge of investors saying, or, too late to the market. By the time you get to the market, it might, somebody else will already be there. There are others leaders, but looking at your technology, maybe from a platform standpoint that talks about how it can be used and adjusted over time is probably a better way to pitch something at this point from my perspective.
Okay, if I can jump in. Hi, I'm back, everybody. I do appreciate all the shout outs for Biotech Showcase. It was a baby I launched a number of years ago, so thank you. And I hope it's been productive for everybody. One of the questions that came in is from one of our viewers, a writer actually for Biospace, whose question is, has the perception of the biotech industry changed from its savior status that it earned last year to something else as COVID fatigue sets in? What do you guys think? I say we still have the white hat, but.
I feel it depends on the community. I think if you are talking to general investors, we've seen some fatigue setting in general markets. If you're talking inside our own little ecosystem, I think we're still doing very, very well overall. So I agree with you that we still are wearing a white hat from that perspective.
Well, and I hope it's spread a little bit beyond our ecosystem. So
one would hope.
Yes. Lila, one of our other viewers, asked a rather long question, but the point of it was, and I think you touched on it to some degree, what happens when you are a new CEO out of academia, spun out of pharma, whatever, and you don't know anybody? So you don't know investors, you don't know bankers, you are a novice in the space. How do you go about organizing your virtual appointments and figuring out who to meet with? I mean, the tactics and doing your homework are very clear. That has to be done. But how do you do that? What's your best advice? David, you're shaking your head. You've been there.
Yeah, a little bit. The first thing is get great advisors around you, build around you. Just realize that you cannot carry this by yourself. At universities, very often, there are people who can be used as advisors who have some exposure in the community, and then make sure it's somebody who fits with you and fits with what you want to do. So I think that's one place where I'd go. The other thing that I always caution early startups with is people give themselves titles and then they get married to them. And one of the things we all have in this industry is a shelf life, right? I have a shelf life. I know where I'm useful, and I know at a certain point I won't be anymore. And that's okay. So be realistic about your role and what you can do. So I don't mind when founders say, I'm going to be CSO and president because I come with a strong scientific background. You don't need to have a CEO at the head of every company in early stages, or think of yourself as CTO, but understand what your weaknesses are. And then the first outreaches may be people you already know. Everybody knows somebody, but get those people around you and then use them and build out from there.
Right, and you made a very good, great point. Not every founder needs to be CEO.
Nope.
And because you actually need skilled management to lead a company. So, hey, Cliff, what did you do when you were first a new CEO? I think you've known people in the industry for such a long time, so you probably had many years under your belt of getting to meet.
Well, I was, biz dev person at a large pharma and a large biotech company that had emerged and become successful. So I had a pretty strong Rolodex. I can tell you a couple things. So early on, let me think back early on in my career, and this could go for founders at universities. What I did was I made the rounds to tech transfer offices at some of the top universities and talked to the tech transfer people. This was back in '94. So this is how I started to establish my network that would then lead to better relationships. And I talked to them about the industry, who were the players in pharma, to think about how those connections could be made. And once I had those folks as in my network and started to develop those relationships, like Lena Nelson at Harvard, that was just like terrific to be able to leverage that and get introductions to other people. Yeah. That's one way of doing that. And even a founder can do that in their own institution's tech transfer office, but other tech transfer offices too, or through licensing executive society. That's one avenue that can be leveraged, where there is a lot of relationship building and a lot of information flow about the industry and who to connect with. For me, once I was a CEO I took over the transition from business development to CEO. Again, I had a super great Rolodex for pharma, but I had now switched to more of the investment side. So on the investment side, I brought in a couple of advisors, paid, to be able to make introductions. And then as we built the team and created that pitch and made that introductions, we then built those relationships with those investors. And then over time, now, we've developed the relationships, and I can reach out to those folks routinely.
Yeah, I often think it's the test of a new CEO, a new founder, test of them to leverage their contacts, the people that they know, to make the introductions to them for them, so that they can move their company forward. If they can't do that, can they be CEOs? I think that's a first pivotal test for a new CEO, CTO, whatever they decide to call them themselves. So thank you for that. Anybody else want to jump in?
David hit it on the head. I mean, it's you've got to you can't think that you're doing it alone. You need to reach out, get advisors, get friends. Everyone knows someone who knows someone, and just be talking about, be excited about what you're doing and talk about it in a way that people say, hey, I know someone that might be interested, and we'll offer that introduction for you.
And I would just add, in every community there is obviously the tech transfer people. That's part of their job, is to connect you with people. Right. But there are lots of kind of support organizations in every community that will also kind of work to move early stage founding, spin-off companies, move them along. The other thing that I would do is really look for, and I would especially encourage women to actively do this, look for a mentor, look to somebody else that actually has been there, done that, has been a CEO before. And even if they are not formally coming on as an advisor to you, see if you can have them, kind of befriend them, if you will. Most CEOs that I know actually do like to give back and do like to mentor. And so I think those people are out there. You just have to be not afraid to go out and ask for help. People are
often flattered when you do ask them.
Indeed.
For that help. Mm-hmm. So the one thing that I found, in the space is that my Rolodex keeps growing. It doesn't shrink, because even when people change companies, they stay within our industry. Mm-hmm. Yep. So building that network, starting to expand upon it and tap into it, and being friends with everybody really does serve you in the long run. Okay, so here are a couple of other questions. How do you choose which pharma company to approach? And then there are more technical questions like, what are the best formulas for valuation? So for an early stage company, what would you recommend?
But here's the great thing about being a scientist CEO, which is what I am. In no other industry could a scientist be CEO. The great thing is if you're successful in biotech, if you're off by 0, you'll still make a lot of money. So that sort of gets to I don't think there are formulas. You need to be mindful there. There's a lot of work you can do to learn about pharmas. So for example, if you have an asset that's in hematology and the company doesn't sell hematology assets, you don't have to knock on their door. It's, there's just some very straightforward work that you can do there.
How do you do that, David? How do you find out what a pharma company? There was a time when I first got into this industry, Cliff, you remember that, and David, perhaps you do, and as well as everybody else. Pharma didn't tell anybody else what it was looking for. They kept everything close to the vest.
So for most pharmas, it's very easy to find out from their website or from just a couple of interviews what their major areas of focus are. And if you're unclear, call up the BD person. But generally, if there's no fit for your asset, that's number one. And then number two is look at the size of a company and what is it that your investors expect in terms of a check. And sometimes there's just no fit. There's a great fit in terms of the company and the alignment, but the deal is never going to happen. And that's what I would say in all of these situations. Qualify. Go to call the BD person and just say, hey, before we get into any deep science, I know that that's going to work. How about, just give me an idea of what you guys are looking for. And if there's no fit, say, thank you, we'll see you next year or the year after.
Right, because pharma companies do change what they're focused on. So it's always important to keep.
And if you're following the trades.
Sorry.
If you're following the trades, BioCentury, BioWorld, Endpoints, Fierce, just, and so there's a lot of free information if you're just signing up to newsletters through ad-based offerings. So like Endpoints and Fierce, if you're following those, you can get an idea of what pharma is working on. You can also get an idea. Endpoints will just publish, who's doing deals, how many deal each pharma did, and just stack rank those. And you get an idea, top 20, here's the folks I should at least have in my target list. Then go to those websites and determine, would there be a fit for my asset here? And look at their most recent deals. That'll give you an idea of where they're trying to expand. So you see some folks moving into CAR T, then that's, they're doing CAR T deals. I have CAR T or I have iPSCs. There's something that is a way for you to start to think about targeting those particular pharma. But I used to, it's kind of just common sense. Who's got money? Who's doing deals? And are you in their bailiwick? So that's a good way to think about pharma. It's a little more difficult with investors.
And just to add on the pharma, don't forget about the mid-sized farmers or the not top, top 10, if you will, not the big pharma, because they're always looking for deals as well. And it's important. Sometimes they have a much more focused strategy, but if it fits with what you're doing. On the valuation question, I'm not telling the secret, but no, I'm just kidding. It really is, it's an art, not a science. And you have to think about the end game. And there is kind of such a thing as venture math and thinking about kind of what an exit could be and dilution and how much you need over time to raise and kind of uplifts and things like that. And so if you're asking too much up front, you may, kind of kill the deal before it even starts. Because as David says, a zero is not going to make a difference in the end game, because if you've got nothing, and no investors, so don't be stingy on your valuation, if you will.
And I've found that board attorneys from reputable firms can be very helpful with that, because they go through the valuation exercise for all of their companies. So if you want advice, get a great corporate attorney.
So we have Andrew and we have Kristen on with us. How do you have formulas that you recommend for your clients that you advise?
Andrew, the IP people have come and they ask me what the IP is worth and how to value it, but typically I end up having to ask somebody else. Andrew, do you have an answer?
Andrew?
Yeah, I mean, it's the best question around. I mean, it's whatever two parties can agree upon.
Yeah, that part is true. It's no real formula. It's it's a arm's length transaction. But you do have to think, as an entrepreneur, when you're starting out your company, you do have to think about the time and capital required to get to an exit event. Sometimes the IPO, you can key on that because you kind of do know an idea what you'll get from your last round to your step up to crossover, which is 1.5 to 2x. And then your step up to IPO, which might be 1 to 1.5, maybe a little better depending on your assets. So there's a whole body of writing on these step ups at the later stage of investment cycles. The early stage, it's really arbitrary. It's kind of what
the
you
one
can
thing
get
I'll
to
add,
with
Cliff, to that,
your
I know
debt
we're
investors.
out of time, is that a lot of people will think that they have a great valuation, but there's very little paid in capital into the company. And a license itself creates valuation, but it doesn't create big valuation. So you need to think about how much money has been invested in the company to that point, and then also use comps. But you can't hold on to the comps to the end, because I've seen companies try to say, well, my company's worth 50 million, look at these comps. But then they can't, they're getting a lead that's coming in at 25.
Yeah, Andrew, I think you are in a kind of a catbird seat because you see so many transactions, which CEOs tend to be narrowly focused on their own, but you and Kristen see a broad base of transactions. So you have, a better view of how all of this comes together. So a lot of activity in the back. So one of our other questions is, what would you consider the top one or two other investor events, especially for pre-revenue companies? So we're talking about JPM. I would say that I wouldn't force you to do this, but Biotech Showcase is one of them.
Yes, absolutely.
Is there another one?
I'd actually encourage people to also think of, especially if you're at a very early stage, of credible scientific conferences, not commercial scientific conferences. I'm thinking of ASH or ACR or ASCO as a way to meet investors and get a great stamp of approval from a scientific community that what you're doing is right.
That's really great advice. Anybody else want to jump in there?
Yeah, if bio is live, it's always a good place to develop relationships. It's there are just a lot of people there, and if it's live, it's a terrific conference.
Yeah, go ahead.
I was just saying there are also regional kind of investor conferences. Southeast Bio always does a nice job of bringing in investors. A lot of times people we do a lot of investing outside of Boston and San Francisco. So we think very much that these regional areas will also bring in people from Boston. So think about what's in your backyard and what those communities can develop as well.
Right. There are many of the large regional biotech associations do
exactly.
investor conferences. Mm-hmm.
Yeah, and so do some of the universities do it as well. The tech transfer offices will have there's a guppy tank and a shark tank. And so those are great. And once I realized that half of the people in the audience were associates from the different venture firms, I was like, oh, this is not a bad place to get started.
That's right.
Yeah. That's where you get to meet future partners.
Exactly.
That's right.
So here's a question, and I think maybe this can be our last question for the day, for the session. How do you stress selective intentionality for meetings? How significant is the impact of serendipity from actively being in Teddy Roosevelt's arena? Okay, that's kind of a heady question.
Serendipity can play a role.
I think the answer is how important is serendipity in our space?
It is. I mean, there's a couple things around serendipity. Did you choose the right technology, and is it going to play out? I mean, there's some of that. Some of that has a little bit of luck involved, but also relationships can lead to serendipity. It's you know, a couple deals I've done have had, you wouldn't have thought that you were going to end up with that particular deal, but it came through relationship. You're talking to the party on the other side of the table about what you were up to, and they said, hey, we might have an interest. They go back and come back and say, yes, let's do that. So I think it's relationship serendipity. You know the folks, you know enough people that if you're telling them what you do, you didn't think they were a target, and then all of a sudden they decide that they would like to collaborate with you. I think that's a little bit of serendipity in that regard. It still requires the relationships and the conversation.
Yeah, I just add to that, Cliff, that I know as a European, I don't get the Teddy Roosevelt reference. That went straight over my head. I'll give you guys Louis Pasteur, who said, luck favors the prepared, right? So you need to be prepared to have those conversations. And that's how serendipity works, is if you're not ready to have your pitch, Cliff, it doesn't matter that you're meeting tons of people. You need to know what you're going to ask. And then, sure, serendipity plays a big role.
And I would just add to that, listening, because a lot of times you're getting feedback from people on your pitch or what you're doing that may give you an insight as to how best to pivot or how to adjust what you're doing or think about it. So making sure you're an active listener also, I think, adds to the serendipity as well.
What great
Create your own.
What great advice. As we wrap up, I want to ask Andrew and Kristen if you have any other overarching insight that you'd like to provide the audience. I think this was a really rich discussion, which has been recorded and will be posted on our website shortly. Andrew, Kristen.
I'd just echo what a lot of our other speakers have said, which is, you know, really maintaining relationships. Even though somebody that you meet at this conference or you have a virtual conversation might not have an opportunity for you this year, it's always worth keeping in touch because it's a very small ecosystem, even though it continues to grow year after year. We see a lot of the same people. We see serial entrepreneurs starting up new companies. We see people flipping roles from being scientists to head of companies. And just maintaining those relationships, I think, is very, very important. And as to Kip's point, listening for feedback is always helpful.
Great advice. Andrew?
Yeah, I would just say I went to JP Morgan 10 years ago, and I was completely lost the whole time. I didn't, you know, it was an eye-opening experience. So you do need to build your relationships around biotech, you know, whether it's J Labs or some type of an incubator, and build from there. We are seeing a lot of deals, a lot of new co's are being formed. I'm in the emerging company space, so that's really exciting. And we're seeing a lot of family office money that's getting more active into early stage biotech, which is also great. So thank you for this opportunity. We really appreciate it.
Yeah, I think it's great. And we've just gotten an applaud from some of our listeners. So thank you all very much for joining us. And that is it for 2021. This is our very last salon. We hope to see you at Biotech Showcase. And please join us in 2022 when we resume the virtual salon series. Thank you, everybody.
Thank you.
Thank you. Happy holidays.
Well, happy holidays.
And stay safe, please, everybody.